becomes more valuable. That's very different from a more income and profit-based model of a company. And so this is very different from an equity raise. First of all, when you raise equity, you sell stock. It's not taxable, and you don't want to give it all away. There's only 100%. So the first time you raise money, you need to raise enough to get to first base, enough to have a minimum viable product, enough to get some traction with customers, and then you're out of money. So, but you have traction and things are working, so then there are investors who want to give you money on top of your success. If it doesn't work, investors haven't lost too much. You can just start something else again. If it doesn't work and you've got some money left over, you pivot. Pivoting is not done in the ICO world. In startup world, pivoting is the norm. Almost all large successful startups are not in the same business they started in. They pivot all the time. So when you give money to a team and you're an equity holder, you're asking them to go get traction and figure out what's the best use of the money, not to do what their business plan says. The business plan is always garbage. The business plan never matters. The business plan is just for raising money. But then you get engaged with the market and you learn things and you go whichever way the market takes you. And if you're lucky, you don't run out of money. If you're lucky, you get a bit of traction, and then you take the next round of funding in stages. And equity is a security. By definition, in almost all countries, equity is a security. That means it cannot be sold to the public. Initially, in general, if you're raising more than about $1 million, you have to do it through accredited investors. This is the law. So it's a completely different market, and yet I think this is what most companies really mean when they say we're having an ICO. They really mean we want to sell stock, and that aligns the interest of the investors and the projects. Too many projects are overfunded. Too many projects have $100 million, and that's for something with like no traction yet and just a white paper. That's way too much. It's not a good way to allocate capital. So this is how I think it's going to play out over the next couple of years, and this is what we're involved with at Pillar and my other company, 2030. That I think that 30% or so will be equity. 30% of tokens issued will be for equity. We're building an equity token platform, and we hope to build an equity token exchange. That's a stock market for little companies, for startups. That has never been done before. We're up against a lot of regulatory challenges, but we hope eventually to build just that, a regulated market for startup stock in the form of tokens. Also, if you have a hedge fund, I think some of about 10% or so will be fund tokens, and right now it's very hard, it's close to impossible to tokenize a fund. The law doesn't allow it yet, so we have a lot of work to do to tokenize crypto funds. And most crypto funds many are operating illegally if they sell you a token. Most of those tokens are not compliant with law. Then on the asset side, some will be securities, some will not be securities. Thank you. Some you can buy, a diamond. You don't need a license to buy a diamond, but you may need a license to buy a house, or you may need. It's going to be regulated if you buy a house, or other kinds of assets. If you buy various kinds of crypto assets, will be regulated, and some won't. And then I think we're going to sell a lot of tickets. What's a ticket? A token, generally, what we think of a token is a fixed supply. It's a fixed number, which creates scarcity, and the price goes up and down according to supply and demand. Just like in the stock market, when you have a fixed number, the price goes up and down. But when in a ticket, you have a fixed price and you have an unlimited number. And we're starting to see smart contracts now that can generate tickets on demand. And if you look in your wallet and you look at most of the tokens in your wallet, you find a lot of things with little, barcodes and things that are scannable. And these are almost all tickets. Tickets for rides or gym memberships or effectively for government services.